Property and Casualty Insurance Exam Study Guide PDF. Welcome to the quiz. What does blanket coverage mean in property insurance? Is it A, a single limit of insurance that applies to multiple locations or classes of property, rather than specific limits on each? Or B, coverage that applies only at night? C, insurance for blankets and linens? Or D, coverage that is vague and unspecified? The answer is A. Instead of scheduling separate limits per building or category, blanket coverage provides one overall limit that can apply across multiple locations, buildings, or property classes, e.g., $5 million blanket on all real/personal property at several sites. It offers flexibility and avoids underinsurance at one location. Not time-specific. Not literal blankets. Not vague. Blanket spreads one limit over multiple exposures for simplicity and protection. Next question. Which commercial auto coverage form covers any auto the insured owns, hires, borrows, or leases? Is it A, Symbol 1, any auto? Or B, Symbol 2, owned autos only? C, Symbol 7, specifically scheduled autos? Or D, Symbol 9, hired autos only? The answer is A. Commercial auto policies use symbols and declarations to define which autos get liability coverage. Symbol 1 is the broadest. Any auto covering owned, hired, non-owned, borrowed, leased, etc., with few restrictions. Symbol 2 limits to owned only. Symbol 7 to scheduled autos. Symbol 9 to hired only. Symbol 1 provides maximum flexibility for broad auto exposures. Next question. What is the key difference between occurrence and claims-made liability policy forms? Is it A, occurrence responds to incidents that happen during the policy period, claims-made responds to claims first made during the policy period? Or B, occurrence is only for auto liability, claims-made is for general liability? C, occurrence policies are always more expensive? Or D, claims-made policies have no need for a retroactive date? The answer is A. Occurrence covers incidents/accidents during policy period, claim anytime later. Claims-made covers claims first made during policy, reported, for acts after retro date. Not type-specific. Cost varies. Retro date is key for claims made to limit prior acts. Main difference is trigger, event date versus claim date. Next question. Which coverage form provides the broadest direct physical loss coverage for commercial property? Is it A, basic form, CP 1010? Or B, broad form, CP 1020? C, special form, CP 1030? Or D, earthquake form? The answer is C. Commercial property causes of loss forms define what perils are covered. Basic, CP 1010, is named perils with the narrowest list, about 11 common ones like fire, windstorm. Broad, CP 1020, adds a few more perils and some extra coverages like collapse. Special, CP 1030, is open perils or all risk. It covers direct physical loss from any cause unless specifically excluded, making it the widest because exclusions are listed instead of covered perils. Earthquake is a separate add-on. Special form gives the broadest protection for unexpected causes of loss not carved out. Next question. In a commercial liability context, what does products completed operations hazard cover? Is it A, liability arising from the insured's products or work after it has been released? Or B, damages to products while in the insured's possession? C, injuries to employees while manufacturing a product? Or D, the cost of recalling a defective product? The answer is A. CGL splits premises/operations from products completed operations. Products completed covers liability for bodily injury or property damage caused by the insured's products or completed work after handed over to others, e.g., a faulty part fails later causing injury. While in possession or during work, it's premises/operations. Employee injuries or workers' comp recalls are separate. Products completed handles post-handover liability from defective products/work. Next question. What is a retroactive date on a claims-made policy? Is it A, the date after which an incident must occur for it to be covered under the policy? Or B, the date the policy was issued? C, the date a claim is made? Or D, the date the policy is canceled retroactively? The answer is A. Claims-made liability policies cover claims first made and reported during the policy period for wrongful acts that occurred after a specified retroactive date, or retro date. Acts before the retro date are excluded, even if claimed during the policy. It limits prior acts exposure. Not issuance date. Not claim date. Not cancellation. Retroactive date sets the earliest covered act date. That's it for today. Don't forget to like and subscribe. Tell us how many you scored out of 6 in the comments, and let me know what topic I should post next. Bye.